The member for Corio is warned. I call the honourable member for Fairfax.
My question is to the Treasurer. With 556 companies being wound up in May by the Australian government, 77% of all wind-ups in Australia, twice as many as July 2014, why has the government dropped the threshold level for wind-up from 300,000 to 30,000? Does the government really support small business? Why not adopt a Chapter 11 system to keep Australians employed and businesses going?
I call the honourable the Treasurer.
Well, I thank the honourable member for his question. It has been an issue that has been hotly discussed over the years, whether Australia does go down the path of having a Chapter 11 equivalent to the United States. I will recall this when I was Minister for Financial Services in the development of CLRP, the Corporations Law Reform Program. We had a good look at it at the time, back in around 1998, 1999. And one of the reasons we didn't go down that path was because in Australia there are a number of options available, such as the appointment of administrators. Obviously the court can appoint administrators and so on. The most important thing we can do in relation to this is keep the door open for positive changes that will help small businesses in particular, as the honourable member said, basically work their way out of difficulties should the opportunity arise, and importantly, not in any way create credit problems for banks that are primarily the lenders to those small businesses. What we've seen over recent times, well, in fact the last decade, is a larger number of small businesses are using their homes as equity and security for credit. That has an upside and a downside. Obviously, there is a very significant cost to the individual and their family if the business fails. In relation to where there is unsecured lending to small business, the banks obviously charge much higher interest rates. We have commissioned a productivity report into this. The draft report has been made available from the Productivity Commission. That addresses a number of those issues. The government has not provided a final response yet. But I'd just say this. Whenever you make credit more affordable, more accessible, you should only do so where you are sure that credit risk is preserved. And there is a danger. There is a danger that it can undermine the quality of the risk book in financial institutions and, in fact, make lending to small business far more expensive if you make it harder for the lenders to recover the money that is owed to them. And we don't want any unintended consequences associated with any of the decisions. That's why the government is in a measured way considering the Productivity Commission report. And I thank him for his contribution.